let me talk about what is important for investors and what takes country to growth. One of them is certainty. So uncertainty is always something that is difficult to manage for policymakers and for investors. So we've been focusing our work at the World Bank Group to try to reduce the level of uncertainty for investors, particularly when it comes to emerging markets. And what we are doing is that we are trying to work on reform, which are sustainable reform, but also to push countries to stay the course, because it's easier to be able to respond to short-term decision, to short-term impact. And I think that we need to have that conversation around tariff, around that. What is a long-term decision? What is a short-term decision? And how countries can stick to the fundamentals of their policies, which is to have good macroeconomic situation and have a rule of law and an environment which is good. For emerging market, what we have been doing is we had put together what we call the Private Sector Investment Lab, where CEOs of the most investors and funds sat around the table and told us a little bit what was the condition under which they could invest in emerging markets. It's interesting to hear what they were saying. What came out from it is that they want guarantees. Secondly, they want predictability in policy. Local currency came out very strongly, and help our institution, we can help them navigate the complexity sometimes of some of the dialogue with government. And it's a little bit the way we've been organizing our work lately, by focusing really very much on that long-term vision that country can have, building the buffer which allows you to have the resilience when there are shocks like the coronavirus, but also to think about the implementation of it. Because one of the challenges in the emerging market is that often on paper, laws are telling you one thing, but in practice, when you talk to the investors, they tell you that things are moving in a different direction. Lastly, to better use our balance sheet to de-risk investment. When investors are going in geographies that they don't know, the first thing that they're interested in knowing is that if things go differently, will I have a guarantee? Sideways, will I have a guarantee? Will I have been covered? And we have really put a lot of efforts now with the unified platform guarantees that we put in the World Bank Group and MIGA to do that. Secondly, we are taking more and more risk on our balance sheet. Now we are taking more and more junior positions, and we are trying to help countries with de-risking also with some grant money that we make available. So these kind of things that we are doing to navigate that situation.
You're used to looking at emerging markets and developing markets. What advice do you have for developed markets when it comes to de-risking the Trump administration? Because a lot of people are concerned about, as you were saying, policy changes, what that means for their business, what that means for investment.
I'm not the best place to advise policymakers. I think they're dealing with that every day, and each of them find a way to address those challenges. But what I found that was been a common thread is to reach a point of stability and predictability. Today, we saw, for instance, India had some adjustment on their tariff, and other country. What is a common thread of all these countries, which I've been discussing it, is try to quickly get at a point of predictability and stability at the level. I think it was less the level than the predictability in the dialogue, because that allows investors to be able to make the long-term decision that they need, and policymakers to be able to also to have the foresight in their policy making.
Are you concerned that governments aren't prepared for the job loss that AI is going to create? I
think the world which we have totally different type of shocks. We are used to commodity shocks. If you look at, for instance, IMF, they had batteries of tools that were put in place to help addressing those shocks. I used to work there, and it was a time of all these commodity prices. We have shocks like COVID, which was also another type of shock. And we have those climate change shocks, and now we have this type of shock. So I think that what is happening now is that you have a lot of heterogeneity in the type of shock and a lot of simultaneity in the shocks, which means that bottom line, you need just to build some resilience in your macroeconomic situation, in your reserve, so that you can react to these shocks, which are not the type of shocks that we used to have and which come now as together.
do you think that governments are banking this in terms of the worry about AI and job loss? Because obviously it's not something we can quantify yet. And we heard Jamie Dimon just a few weeks ago at Davos talking about governments have to create incentives for corporates so that they don't shed jobs at such an alarming rate.
I think that we have, let's say, we have big AI and small AI. That's why we call it. If you look at for emerging markets, small AI is always application of AI which should make a difference. For instance, a farmer in an African country can now take his phone and look at a plant and know exactly what type of fertilizers they need. This is small AI, and we will increase a lot of productivity. The way of learning is changing, particularly in low-income countries where we have access now to much more knowledge and be able to do that. So we don't talk a lot about that side of AI, which is in fact job creating, which is creating conditions of higher productivity of labor force. We didn't have access to a certain number of tools. And now if you turn to more advanced economy, I think that it will be a different type of job, a different type of jobs being created. I think that in sector like health, we still need the human touch in handling the elder population and so forth. It will help in accelerating the diagnostics and reducing the cost of health services, because you will have much more precision medicine which is developed by genomics. And actually, UAE is a good case because they have been doing a lot of work around that. So I think that we'll be having some productivity gain around health and so forth, and allowing people to work longer, but in different type of works. Mm-hmm. So I think it will be sometime replacement, it will be sometime substitution of the labor force in different type of work.
Tell me this, there's been a lot of conversation, particularly in the last few months, about the health of the US dollar and the flight to gold. In your mind, how damaging is this when we talk about the health of the US dollar? The dollar is the world's reserve currency. It's a slippery slope.
I think that we should be careful not to react too quickly to short-term movement on the market. We have seen gold prices spiking, we see them going down. So I think that you will have volatility when you have this type of shocks. And it brings me to the previous point I made. The nature of the shock, a shock that people were not anticipating. So it's quite normal that the market have some volatility in the short term. And I will not draw conclusion at this stage from a drastic conclusion like the substitution of the dollar as reserve gold for dollar. I think that we need to have much more a longer period of time to be able to have a judgment. And I think that the central banks also are looking at it. It's a set of issues. Digital currency is another question which is important. So in the way you are looking at monetary policies, the way you are looking at market operation is different, because you have a lot more innovation coming there, being digital currency, being cryptocurrency, being the evolution of the dollar and so forth. So I would say, let's give a year of a little bit when all this settle a little bit, and you have also the geopolitics, some stability in some situations which are a bit volatile, to be able to draw a bit more conclusion. I think that doing it now would be a bit hasty, in my view.
So in wait-and-see mode.
Absolutely.
And finally, when you take a look at this from an investor-specific perspective, where are you seeing the most interest?
Electricity, energy. Whoever you talk to, he talk to you about energy. And I think that when you talk about electricity, we need not only to think about generation, but there is something that people don't talk enough about, is transmission and distribution. I think that with the volume of electricity being generated and will be generated, we need to look at a segment, because even in more advanced countries, we are seeing huge needs of investment in transmission and distribution, because the systems are not ready to take So energy comes number one. Critical minerals, obviously, and we are working at the World Bank Group a lot on this. Now we had recently signed 2 transactions in lithium in Argentina. We work on copper, etc. And we are trying to also help countries that are producing a lot of these critical minerals to also think about diversifying their economy. For instance, in Africa, we are working currently around the Lobito corridor. which we allowing to move mining productions, but we would like to ensure that country takes that opportunity to develop the agricultural sector around that corridor so that they have that diversity in their economy and not rely only on mineral. And lastly, working with country about starting having a primary transformation of these mineral when the conditions are met.
And what's the greatest danger there, that the infrastructure just isn't in place to take full advantage?
You need infrastructure, but you need policy. Let me give you an example. I will not name those countries, but there are countries where people are invested in railways, but the railway gets to the border and stuck there for 2 weeks because there are bureaucratic decisions that needs to be made. So as much as we emphasize and talk about logistics, about investment in infrastructure, we should be talking also about policies that we allow country to be able to trade. And I think that you have a very good example of the potential of innovation in logistics. We have companies like DP World, Abu Dhabi Port, all these institutions which are here are kind of at the forefront of innovation in terms of logistics and being able to reduce the cost of transactions.
So the policymakers just have to get their act together.
Absolutely.
As usual. Your Excellency, thank you so much for joining us. Thank you.
Hey, thanks so much. Thank you.